Joining me now to talk about these less than stellar numbers, we have John Carney, Breitbart economics and finance editor and co-author of the Breitbart Business Digest, and Joe LaVorgna, chief economist, SMBC, former National Economic Council chief economist at the White House, and a senior fellow at AFPI. All right, gentlemen, these are not good numbers. I will begin with you, Joe LaVorgna. What does it tell you about the fourth quarter, and what does it tell you about the first quarter? And by the way, if I can get this out, hold on one second. You got some layoff announcements today. 18,000 layoffs at Amazon, 11,000 at Meta, Facebook, 10,000 at Microsoft, which is really a fabulous company, 8,000 at Salesforce. Goldman Sachs having big layoffs, too. So we may see some softer employment numbers. But, Joe LaVorgna, how bad is this story?
First of all, I have a little bit of a bone to pick with you. We had an inflationary recession in the first half of 22.
That is true.
Okay. Now we're going, now to answer your question, we are going to have a more traditional recession sometime starting soon.
Deflationary recession.
Deflationary recession.
Right.
Because the production numbers, very seldom, Larry, if you looked, have we not had recession or been in recession when production is down 8% annualized? The housing market's already in recession. And we see that in housing starts, builder sentiment, permits, housing sales, et cetera. So that's a more traditional downturn. When it begins is hard to say. My guess is sooner than later. The bond market is behaving as such. We've had a massive rally in 10-year yields. The curve remains very inverted. The market is starting to price easing later this year. So it's going to get ugly.
Will the fourth quarter of last year be negative? Is that possible with these bad numbers?
No, because of the arithmetic and where the growth got weak as we went through the quarter. So the ISM manufacturing weakened in November, December. Production was soft. But this is a point I may have made to you before. If you look at the six last recessions, the economy grew over 3% right before the economy tipped over. So even if growth looks good in Q4, it tells us nothing about where we're going.
But it kind of looks like, John Carney, sequentially, November worse than October, right. December worse than November. And so everyone's interested in what happens in this year.
We got a hint of this.
What's going to happen in January?
Well, we got a hint of this from the Empire State Manufacturing Survey from the New York Fed. That thing fell off a cliff. It was much worse than anybody thought. It went from a negative 11, I think, on the general business to negative 32. So this thing was a wreck. So it's telling us that the industrial production numbers we're looking at for December are probably getting worse in January right now. And you're right, it got worse. You can see it all throughout the economy. In October, retail sales were higher than they were in November, which were higher than they were in December. So what we're seeing is this slide towards recession happening across the economy.
So wait, let's just think about this. We know in January, both ISMs, manufacturing and services, were down. Is that right?
I don't. Yes,
for January.
In December. No,
December.
Oh,
yeah,
those are
December numbers.
So we don't know yet what the ISMs
Right, we're waiting for the January, but we only really have one survey number out of January so far. That's the New York Fed. But we'll
there's
soon.
manufacturing left in New York.
There is manufacturing left in New York.
That's kind of a joke. I didn't mean
but no, but it is. What we're looking for now is confirmation from the Philly Fed survey. That's the most important one. It has the longest history. It best reflects what's going on around the country. So if it's just New York, that might not be, recession right away. I was in the second half of year recession because the labor market was doing so well. The numbers today have me worried that it's coming much faster than we thought.
So, Joe LaVorgna, you will tell us that the hope for a soft landing is out the window, and are you certain of that?
No, I'm not. Well, I think the hope for a soft landing is probably out the window, given the fact leading indicators have turned over. We're at an inflection point. If, however, China reopenings, you get the supply side benefit of supply chains opening up more and the Fed pivots, I don't think they'll make the Trump tax cuts permanent if there's some sort of fiscal deal, if there is a recession. But it seems to me while a recession is by far the likely case, it doesn't have to be deep. It kind of depends what the policy response is as recession takes hold. If the Fed decides it wants to keep rates high, or we come up with some idiotic fiscal plan, then we can make it worse.
What should Washington do, John Carney? I mean, what should they do?
I think the Fed really should not look at these numbers and decide that inflation is defeated. We have had a couple months, 2 months now, of soft inflation numbers. That's happened in the past, and then you get inflation coming right back if the Fed looks like it's going to step back. So the Fed should not at all.
Why is gold booming and the dollar falling, speaking of an inflation recovery? I mean, I don't know what all that means. You have a deeply inverted curve, short rates way above long rates now. Okay, that's a negative sign. Joe is right. The index of leading indicators plunging, basically. The M2 money supply plunging. But gold is soaring. I mean, I haven't looked at it today. I've been busy today, but it's overnight. It's gone up almost $300 in the last month or two. Oil looks like it's rallying. What's that all about?
So I think one of the things that's going on is, one, the China reopening is having people think, okay, it's for real. People were not confident about this. So that explains the oil story very well. There's the oil demand from China was way down. It still might be down more than people expect it to be. And I think that's also the search for alternative currencies that's going on around the world is probably driving up the price of gold. We had Saudi Arabia say this week that, yeah, they're open to being paid in things other than dollars. Well, if you don't want dollars, maybe you want gold to be able to pay off your, oil debts.
Joe LaVorgna, what do you want the government to do?
Stand back and stay out.
You were the NEC chief economist in the White House. What should government do?
Here's what
we may need an economic rescue this year. It may be coming on like gangbusters. So what should government do?
Okay. Well, the question I was going to say to you, it would be great if we actually figured out the cost benefit of certain regulations. Mm-hmm. We did that under President Bush 43. Where they went systematically through what's effective, what's not. Because it seems like oftentimes we do things without really any thought as to whether it'll make the situation.
Trump was a big deregulator.
He was a big deregulator. Look, the Fed, the reality, Larry, is as much as we might beat up the administration, deservedly so, the current one, the fact is the Fed has a lot to blame here because they were way too slow in raising rates, way too slow in reducing that balance sheet, way too slow in keeping emergency rates in place, and now they swung the other way. So I like the Fed. I'm much more pessimistic or much more less worried about inflation than, say, you and maybe John. I want the Fed to ease rates.
I don't want the Fed to control the economy. Can I just say that? I just think it's a Wall Street affliction. Fed. Okay, I understand they have powerful influence, but so is fiscal policy. Taxes and spending and regulations.
We get to vote for those things, or, at least the people who enact them, we don't get to decide, who's on the Fed.
I mean, I think these crazy climate change policies, we're depleting the Strategic Petroleum Reserve, which was stupid, but in general, climate policies, radical climate policies, have damaged this economy. They've damaged the energy sector, okay? Regulatory policies. You got this crazy woman at the Federal Trade Commission who now wants non-compete contracts to be off the board. She's waging war against all of American business, right? What's her name? Lina Khan? Do I have that right?
Yes.
All right. Look at, what she's doing. Look at what FERC is doing. You can't build a new pipeline, for example. All these things add up. They should be reversed.
And pressure was coming just this week, time to go along with Davos, on banks. A report was put out basically yelling at the banks for continuing to provide financing to fossil fuels. They singled out Citigroup and Bank of America, a group called Reclaim Finance, which I believe is a French non-government organization. I tried to look into it. I can't find where the money comes from. So that, it is a shadowy climate change pressure group. But they put out these reports, and then they get reported in the American media as if banks had done something wrong by continuing to finance fossil fuels.
I mean, we need to roll back anti-growth policies, Joe LaVorgna. That has something to do with this. Yeah. I know the Fed was late to the game, but remember, in many ways, it was fiscal policy forcing monetary. I mean, literally, the government was stuffing bank accounts with all this extra cash. And that chicken came home to roost in the form of higher prices. And then the Fed accommodated it, monetized it. Now they're taking it back. I get all that. But I think fiscal policy has to change. We're just going to talk about that later in the show with Chip Roy from the new House Republican majority. But I think fiscal policy, we're going to have to save the economy this year. This thing, if these numbers are apocryphal, okay, maybe they're going to miraculously rise in January. But if they don't, then this recession is going to come on a lot faster than people thought, a lot harder, and maybe a lot deeper. Washington's got to respond to that.
And when you see those retail sales numbers that were down so much, think about what that's going to do to the inventory adjustment in the first quarter of this year. It's going businesses are going to be left over with a ton of unexpected inventory, so they're going to be selling that off. That's going to be a downside for the GDP as well.
What fun. What fun. Geez, glad I have a job. By the way, folks, if you have a job, keep your job, all right? Put your shoulder to it and keep your job anyway. John Carney, thank you. Joe LaVorgna, thank you. Joe, just look how he's smiling. He got it right. He got the recession story completely right. Look at him. He can't help himself.